Hi, my name is Darren Joseph from HTJ.tax. It's the middle of September 2023, and I'm in the US. I'm here for the annual America Outbound Conference. So I'm in New York and Beverly Hills, a great conference that brought together so many qualified advisors helping Americans move overseas, or at least get their plan B in order. And today, I want to talk about one of the issues we discussed. We set up an office in Portugal during COVID in 2020, in summer 2020. And we've been dealing with hundreds of clients, hundreds of US exposed clients who need advisory as well as compliance with tax returns, both on the Portugal side as well as the US side. With the NHR, the non-habitual residents, and those who in the know would appreciate that this is a special tax regime that creates a reduced tax burden for foreigners residing in Portugal, at least for the first 10 years of their residence. But this structure is very nuanced. Unfortunately, it was sold as being, oh yeah, you can live in Portugal tax-free. Not necessarily, and especially for many Americans who are astute investors and they have investment accounts back in the US, they have felt the sting, because while capital gains in the US, long-term capital gains will be, let's say, 23.8. In Portugal, capital gains are 28%. And it's due to increase to whatever the marginal tax rate would be, which is up to 48%. So basically it's higher than the US, and you feel the pain from the first year in which you're a tax resident. So as a result, people have been using Malta structures. So they create entities, they create shell companies essentially in Malta and pass, which own their securities accounts in the US. And so when it passes through there, the dividends can be received into Portugal tax-free, and the tax burden in Malta is quite low. The thing is that while it has been popular in the past, we definitely don't advise clients to keep such a structure. They need to look for something else. So we live in a new age where shell companies are not appreciated by tax authorities. Tax authorities mostly go by the principal purpose test. So the principal purpose of any structure must be commercial, operational. There must be some benefit other than tax. Because if it is believed that it was structured solely for tax benefit, it will probably be disallowed. In addition to which, there's no substance. We live in an age of economic substance. You need to have boots on the ground. You need to have resources. You need to have people in Malta actually adding value. Otherwise, it's just a shell company. And aside from the principal purpose test of individual jurisdictions, I think at the European level, there's something called the Unshell Directive, ATAD 3, Anti-Tax Avoidance Directive 3, which should be coming on stream in the foreseeable future. Shell companies are on their way out. That is so 1990s. Too much Netflix. Ozark, stop watching it. Shell companies do not work in the modern age. It's going to get you in trouble. But if you are a risk taker, then definitely roll the dice. But if you are risk averse and you want to follow the rules, do the right thing, stay far away, or do it in the right way. My name is Darren Joseph from HTJ.tax.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.